Good morning, ladies and gentlemen. It's my pleasure to host you for this session on mobilizing private capital through innovative instruments in the capital markets. Before I start, I'd like to thank our host, the Uzbekistan government, for organizing this annual meeting in this beautiful and historical city of Samarkand. When we talk about the capital markets, I think it's front and center what AIIB is focusing on with respect to our strategy for private capital mobilization. Being the only 21st century multilateral development bank, we aim to be very client-focused and respond to our clients' requirements. And in doing that, we also aim to be innovative because we feel if we are to respond to what our clients require in the times that we live in, we need to be innovative, we need to be responsive. We have, at AIIB, we have 4 thematic priorities. One of them is private capital mobilization, and it's very closely linked to the other 3 priorities. The first one is, of course, we finance sustainable infrastructure, sustainable from an environmental, social, and economic perspective. And the economic is quite important. I'll touch on that a little bit as well later. We finance infrastructure that provides connectivity, economic connectivity to our members. That's quite important. We also finance infrastructure for tomorrow. So digitally enhanced infrastructure is key to us as well. So when we talk about these priorities, they're all linked. And all transactions that we do, they of course have to be sustainable. AIIB is a green bank. So they all have to be sustainable. And they all have to check at least one of these 4 boxes of our priorities. Usually they check more than 4 boxes, more than 1 box. Where there is, as we know, there is increasing pressure on the traditional resources, financial resources that are available to sponsors and clients to finance their infrastructure projects. Just to give you an idea of scale, the bank loan market, which remains the most used for emerging markets infrastructure, with a volume of $230 to $240 billion a year, 80% of the financing in the infrastructure space is accessing bank loans. The balance 10% is through export credit agency support, and the rest is, the remaining 10% is everybody else. So banks are clearly the primary sources of finance. But if you look at the scale, banks, the total loan volume per year ranges from 500 to 550 billion, but capital markets are 8 trillion. And so traditionally, capital markets have not focused so much on emerging markets infrastructure. So what we've been trying to do through the innovations that we've been working on in the capital market space is to attract institutional investors to capital markets. And that's what we're going to talk about today. In addition to the capital markets, what's an important product in bringing to bear the resources that we can is the guarantee product. And we'll talk about how we have selectively used guarantees to generate capital from non-traditional sources for emerging markets infrastructure. We, at AIIB, we would like to be the go-to bank for infrastructure from our clients' perspective. So we're trying to innovate, we're trying to respond to clients, and hopefully we'll achieve our objective of being the bank that sponsors come to first when they have a challenging infrastructure ask. In today's seminar, we have 4 extremely distinguished panelists. Not only are they extremely successful individuals in the fields that they've operated in for several, with a strong track record, they've also been very directly involved in the topic that we're going to discuss today. So let me start by introducing the panelists. To my extreme left is Mr. Antoine Castel. He is the Chief Risk Officer for AIIB, and he heads the Risk Management Department. His main responsibilities are to ensure the stability and financial continuity of AIIB. He oversees risk capital allocations and utilization, manages financial and non-financial risks, including reputational consequences, the bank's compliance and integrity functions. These compliance and integrity functions include know your customer, AML compliance, and financial crime sanction compliance, etc. So before joining AIIB, Mr. Castel used to work for Crédit Agricole and Société Générale, and has extensive experience in commercial banking, investment banking, and experience across multiple geographies, including Asia, Africa, and Europe. next to him, let me go to May Adel next after that. May is the advisor to the Minister of Finance of Egypt for capital market operations. For the past 2 years, Ms. Adel focuses on providing the instrumental guidance to the Ministry of Finance of Egypt in developing effective debt management strategies, promoting sustainable finance, and introducing innovative financial instruments. Ms. Adel has served in the Treasury Department of the Arab Bank for 25 years. She has also helped organize Cairo ICT, one of Africa's largest technology events. She's also a board member of different institutions, including EG Holdings, Trade Fairs International, and the Egyptian financial company for sovereign Tasqiq. Next to Antoine is Mr. Keith Lau. He's the head of portfolio management, infrastructure financing, and securitizations for the Hong Kong Mortgage Corporation. Mr. Lau leads the portfolio management function of the IFS division and the issuance of infrastructure loan-backed securities in Hong Kong Mortgage Corporation. He has over 15 years of banking experience, predominantly in portfolio management and origination of project and export finance transactions in the utilities, infrastructure, and mining sectors. Prior to joining Hong Kong Mortgage Corporation, he held various roles within the corporate finance division of Australia and New Zealand Banking Group in Melbourne and in Hong Kong. He was focusing mostly on China origination and credit management of a portfolio of project finance and structured finance loans in the Asia-Pacific region. And just right next to me is Mr. Stéphane Dubos. He's the managing director and co-head of low carbon energies at Natixis. Mr. Dubos joined Natixis in 2010, has contributed to the development of the Natixis Power and Renewables franchise since 2015. He has over 22 years of experience, initially through infrastructure project finance at various banks, international banks, Dexia, BNP Paribas, EDF, EN, and Natixis, and then as industry banker since 2015 for the Natixis Power and Renewables Industry Group, M&A, ECM Investment Banking, Corporate Finance. So with that, if I could just join the panelists. Let's start a discussion on this interesting topic. If I could go to May first. May, we all know the very public, very interesting bond issuance that your government did last year. It was widely acknowledged as a very successful transaction. Can I ask, when you issued the Chinese in the Chinese panda market for the first time, what was the intention that the Egyptian government had, and why did you choose to access the panda bond market?
Thank you. First, let me start by thanking you for being part of this conference. This is very important to us and to Egypt because we wanted to share our experience as an emerging market and African continent, how to tap new markets, how to the experience of the panda issuance was very important to us, to Egypt, as for us, before we used always to issue normal Eurobonds. We had a lot of concentration by investors for Eurobonds, so it began in, I think, 2020, when we decided that we have to do some diversification in the market, in the external debt issuance market. This was done firstly through issuing our green framework. We issued our green bond and then a green loan because also it went with our vision of Egypt Vision 2030 of sustainability that is aligned with the Paris Agreement of the carbon goals. And at 2022 in the COP27, we issued also our sustainable framework. We upgraded the green framework to sustainable to allow us to have more sustainable projects. We were ready for more diversification in the market. The second thing that we had to tap new markets, not just the Eurobond market. So we thought which markets are there to tap to also increase the appetite to have more investors. So we started by the GCC investors through the Sukuk issuance that we did. It was a very successful issuance too. And then we wanted to tap the Asian market through the second largest fixed income market, which is the Chinese market. However, we can't tap this market without being an investment grade. And at that time, it was as an emerging market, an emerging country. And after the COVID, we had some also, it was very difficult to tap new markets without getting a guarantor. In order also to continue our growth that we wanted to continue, which is mainly sustainable projects and green projects, the transportation, the digital connectivity projects, we were unable to do this and continue our project without tapping new markets, without having guarantors like AIIB and AFDB who helped us also. It was a partial guarantee. So with the help of the MDBs and with your help and with the experience that you shared with us of having a guarantor with us, we were able to successfully tap the Chinese market through the biggest issuance in the Chinese market, through also an emerging country. And this was very successful to us. It helped us diversifying our external debt. It helped us decreasing our cost of debt, because if we normally tap the market, it would have been at these times very expensive. The markets, the yields of the normal global yields were very high. Our credit rating was not that high as now, even it's now much better. So it was very difficult to tap market at a low cost and continue our project. So thanks to you, we were able to do this, thanks to the Chinese government, that because we have a good relationship with them, that we could tap the markets, and we want to share this experience for the rest of the countries also, to know how we did it and to follow us in order to enable them to continue their growth and targets. Thank you.
Thank you, May. And I think if we have time, after all the questions we have for the panel, we'll probably request you to give a little bit more color on the preparation that you had to do before the issuance and all the parties that were involved, including the Chinese government-related entities that supported the issuance. If I could go next to Stefan and Keith. You know, the bank markets continue to be the primary source of infrastructure capital, despite the institutional investors who are mostly focused on capital markets having a strong interest. What do you think are the impediments that prevent them from investing? And to put the question another way, what is it that you think we can do to increase the participation of institutional investors in the infrastructure space? Stefan, if I could go to you first.
Yeah, sure. First of all, I would like to thank you as well for your very kind invitation. Natixis is a French investment bank belonging to the BPCE group in France, and has had a long history of dealing with institutional investors. A little more than 10 years back, we initiated, as part of originate-to-distribution strategy, debt partnerships model for the infrastructure asset class, specifically targeting usual European institutional investors, mostly coming from the lifers and insurance space. So we've got to get educated over time through those existing debt partnerships agreement on the infrastructure asset class. What were the requirements and impediments, and what was, as of today, limiting further deployment of institutional investors towards that asset class. I guess it's kind of obvious, but first of all, those investors are relative value investors. So lately, one can clearly say that the repricing in an increasing interest rate environment of govies and sovereign bonds has played unfavorably towards the infrastructure asset class. It's kind of very obvious. To give you a very concrete example, a few years back on a large-scale European infra, like a large 2 billion euros French offshore wind farms, distribution ultimately resulted in having possibly 50% of institutional investors. On the most recent French offshore wind farm that closed, it's a quasi long-term sovereign risk. Institutional investors barely exceed 15 to 20%. The rest is banks. So that's an obvious sign of a reduction of their involvement lately that we can concretely observe. And what we observe as well lately, again, because those investors are relative value investors again, is we increasingly observe their appetite for riskier asset class. So new forms of merchant risks emerging in the low carbon energy space. Appetite for subordinated or junior financing as well, appetite for corporate finance, appetite in the context of renewables developer, because this is my field, appetite to finance pre-ready-to-build development risk, against, of course, a certain premium. So to a certain extent, those investors have changed their mindset and have shifted the kind of asset class they were looking at from an investor standpoint. For very long as well, an impediment had been construction risk in the infrastructure finance space. I'm not talking of loan versus project bond and the carried interest, which was an obvious issue at the time, but definitely construction was somewhat an issue for many of those players. That's no more necessarily the case today. It can be the case for a corporate sponsor or sometimes a financial institution, because those players are not rated. And some, I recall typically some large-scale financial institutions do not want to take a counterparty risk on their ability to fund the full construction. So that's another topic. But in terms of innovation that was observed lately to further attract this kind of investors towards infrastructure, there were some very interesting credit enhancement tools that have been developed in a European context in the form of guarantees, sometimes guaranteeing up to 20% of senior debt to make more attractive for institutional investors new forms of merchant risk. So it's in this context that we have financed an interconnector project between France and Italy, which is displaying a very complex merchant risk, which is a market price spread between two respective countries. So those credit enhancement measures can be very interesting. Other innovation, because credit enhancement, that's not only an external guarantee. It can come from a specific form of cash flows. Typically, if you have a sponsor which is developing an infra, but is as well active on the O&M side, O&M can be perceived as a super senior class of cash flows, which can help and be used as a credit enhancement for a bond issuance, and credit enhance that bond issuance. You have a very famous example in the Saudi market, typically, in terms of issuing a corporate bond credit enhanced by O&M cash flows of a power sponsor, very famous power sponsor in the Saudi market. That's another form of innovation that can be attractive to institutional investors. Banks taking care of construction and taking the risk of construction even before a long-term offtake contract is being secured. It's another form of deployment we have observed, and delay the deployment of institutional investor for when the asset is built, when it's fully contracted. That's a new forms of schemes we observe. And I would say flexible amortization schemes. Again, relative value investors, what matters is yield, is target return for them. If you have typically a highly volatile cash flows, we have observed that in a wind farm in Finland, the institutional investors would amortize the facility under a flexible format up to reaching a certain return at a point in time. So it's almost an equity-like approach, even if you are providing debt instrument, but it's a kind of flexible amortization scheme with a yield return objective, almost like a tax equity investor in the US renewables market, typically. So all forms of innovation that we have observed lately leading to their increased involvement.
Thank you, Stefan. Very interesting. Especially the O&M parts, because in the cash flow waterfall for projects, O&M comes ahead of many other payment requirements. It's a senior obligation, so it's very interesting. Also, construction risk banks continue to be the group of financial players that understand construction risk and support the clients through construction. That's also very interesting. And also flexible amortization, although it's not new, but the application to the wind project I think you mentioned is very interesting. Wind, and yeah, it's very, very interesting. Okay, Keith, would you like to add?
On our side, so the Hong Kong Mortgage Corporation Infrastructure Securitization Division, we're relatively young. We're only like 5 to 6 years old. have a history of that long compared to other parties here today. While we're 100% owned by the Hong Kong government, we operate on a prudent commercial basis with the mandate to promote the infrastructure financing and local debt market. So Najib, you highlighted previously in terms of like the bank financing market continues to dominate infrastructure financing. But of course, there's limits to that in terms of capital requirements and all that. And so we want to play a part in terms of to alleviate in terms of recycling that capital. So in terms of market development, to answer that question first, the HKMC, our division objective is to fill that infrastructure funding gap at commercially viable and financially sustainable terms through issuance of infrastructure loan-backed securities, what we call AIIBs in our space. Trying to build that in terms of an acronym that everyone knows about in terms of like ABS, RMBS. Hopefully everyone understands in terms of over time, AIIBs means infrastructure loan-backed securities. So we're targeting institutional investors to alleviate in terms of their impediments in terms of investing into that infrastructure asset class by issuing AIIBs. So our first debut AIIBs issuance, Bohemia 1, was issued last year in May. And we also just completed our second issuance in just this month, early this month. The program carries a finding mission, so we are not in the market to just issue it ourselves. We want to demonstrate in terms of to potential issuers that other players can actually do the same thing in terms of securitizing infrastructure assets and in a highly structured securitization transaction, and also develop this market into an individual infrastructure loan asset class that investors can recognize. So onto the impediments that we find that investors have faced as we've actually talked to them over time. So one of the main things that we found is that investors find that they need a dedicated team to actually monitor, assess the credit of these infrastructure asset classes. And as many of you might know, that these infrastructure asset classes or these assets don't generally have a public rating. So that lack of public rating and also the limited investment grade is one of the impediments. So our platform in terms of AIIBs provides in terms of, apart from the public rating from a rating agency such as Moody's, we also provide collateral management service. So we will continue to monitor and assess the credit of these assets. And also on an annual basis, the rating agencies such as Moody's, S&P's, and the Fitch alike, they'll provide an ongoing annual shadow rating, which will feed onto the public rating of each class of notes that's issued to investors. So each, in addition, investors also talked about in terms of the risk of the individual assets and also investing into sort of like a concentrated asset class, and also if they invest, they need large tickets in terms of to invest into a single project. So our AIIBs allows investing into a portfolio of infrastructure assets instead of a single asset. We also allow investors to actually reduce that ticket size. So for our last Bohemia 2 issuance, the minimum denomination was 200,000 compared to your usual maybe like 20 to 30 million in terms of investing into direct the asset class itself. We also look to boost secondary liquidity. So in the infrastructure space, to actually look for a secondary buyer, it's quite difficult in terms of liquidity. And what we have been doing is talking to a lot of buyers, recycling that AIIBs issuance to secondary buyers. And what we've found in terms of our first issuance to a second issuance is that the oversubscription has grown significantly over time. And so it grew from, in terms of the number of investors, it grew 3 times from our first to second issuance, and we were around 3 times oversubscribed for our second issuance. So there's a lot of investors looking for that asset class in terms of in the secondary market. But of course, our asset class or AIIBs needs time to develop. We've only, as I already said, we've only been in the market for 5 to 6 years and only issued twice. So there's only, in terms of like institutions like HKMC, what we can do over time is to find the pathfinding mission, and to allow other institutions to issue similar asset class securitization over time. So investor recognition of the asset class is also something we want to build. So over time, hopefully investors can recognize the resilience and also the economic cycle in terms of the asset class being resilient to the economic cycle. And infrastructure assets and services tend to benefit from a robust inelastic demand. So over time, hopefully investors can actually understand that in terms of this asset class. And also, of course, there's reports in the market from Moody's and S&P that demonstrate in terms of this infrastructure asset class has a low default rate and also a higher recovery rates as well. And also one thing we want to talk about is pricing. So we issued the ILBS into the market, and what we found is that pricing from investors, they relatively sort of go back to the CLO market in the US. So what we're seeing is for a similar rating for a infrastructure asset, what could go for a very low pricing from a banking market point of view, when we issued, they're sort of linked more to the CLO market. So that's something that's actually driving investor demand in terms of the premium that they're actually seeing as well. And lastly, also, the continual flow of infrastructure loans is what's we're concerned about as well in terms of from the banking market. So we're fortunate, of course, to have AIIB to drive this ongoing deal flow from various countries. And of course, we participate very closely with AIIB on these projects. And with the growing number of infrastructure loans, we can turn these pool of assets into ILBS issuances for additional investors to play in this market. But of course, this is just the start of the journey for us, and hopefully over time we can build this. Thank you.
Thank you, Keith. And just two points you made I'd like to highlight. One is the Moody's and S&P studies. I recall the first time that they did these studies was about 20 years ago. And at that time, these studies were based on 3 decades of historical actual data that they collected from banks. So it was quite a robust analysis and exactly the same conclusion. And I know Moody's has, and I think S&P's may have as well. They've updated those studies recently, and they've come to the same conclusion. So that's quite interesting.
Correct. They have an annual update of these reports.
Okay, excellent. And the other thing is, you mentioned the efforts of HKMC to make infrastructure an asset class. That's also one of the key themes of our strategy for private capital mobilization. One of the aspects was to focus on capital markets and make infrastructure an asset class so that institutional investors are able to invest in these assets. So that's the purpose of the securitizations and AIIB support with clients like yourselves. Thank you. So I think leading from the comments that you made, banks, although they are a key player in the infrastructure space, they do have increasing pressure on their balance sheets in terms of lending to long-term, initially sub-investment grade assets. So how do we think that these can be securitizations can catalyze more financing from banks or make them for sustainable infrastructure? How can we position these such that they support the banks who are otherwise constrained in recycling the balance sheets and financing more sustainable assets? So I'd like to ask this question to Stéphane, yourself, and Antoine. But maybe Stéphane, if you could start, and then we'll request Antoine to add.
Yeah. So no, definitely, I guess we initiated those debt partnerships a little more than 10 years ago. Definitely to free up capacity, but now we've reached a stage where we need to do more. Maybe just to give you a bit of insight on those existing partnerships. They came at a time 10 years back where education was still key in terms of attracting institutional investor. And at the bulk of this partnership, there was the concept of alignment of interest. So basically, it's not as if you structure and you sell down and the other takes the risk. You're both taking the risks. So there is a certain concept of keeping a minimum stake when you enter into those form of partnerships as a bank. And that leads to your point, because if you need to keep that stake, I guess you are not completely freeing up all your origination and lending capacity. So what next can be done? And typically that's where we think that securitization or new forms of CLO vehicle typically can help further achieve additional balance sheet rotation for banks. Another aspect which was key initially at the start of those debt partnerships, for many of those investors, they don't have necessarily the in-house resources to deal with the post-closing treatment of the loan and the portfolio handling of the loan, and they need some form of servicing and portfolio monitoring. They need some guidance on analyzing complex, sometimes waivers taking place during construction or operation, and that's as well part of the deal between banks and institutional investors when they enter into those form of long-term frameworks. A point, but definitely if we further develop securitization scheme in a context where many commercial banks want always to do more, but not necessarily increasing their risk-weighted assets, definitely you will need to achieve additional or consider potentially additional securitization schemes to free up further lending capacity, with underlying infra markets which keep growing at a rapid pace. I mean, it's an amazing trend, and particularly in my sector, in the low carbon energy sector, investments are very significant, as you all know, in most markets, and not only emerging markets, but as well transitioning developed economies. Maybe one point I wanted to highlight is that we increasingly see those securitization discussions taking place not only as a lending institution, as a bank, but we observe securitization scheme with a regained interest on the other side, on the borrower side, on the issuer side, in the infrastructure asset class. There are various contexts where infrastructure is not privately developed. It's regulated. It's in the hands of government-owned agencies or regulated entities with no possible transfer of ownership towards private investors. But still, on the very specific schemes, we start considering possibly exploring securitization scheme typically in the transmission space. I mean, most of you active in the low carbon energy space know that transmission and grid are the key bottleneck for further renewables development in most of our markets, but we need a lot of new investment in the grid space, but lots of the grids belongs to transmission system operators and not to the private sector. So to which extent securitization scheme on that side, on the borrower side, where you would monetize cash flows, attract institutional investors, and free up investment capacity for those operators, that's something we start exploring with some key European players in the transmission space. Another example of a securitization scheme explored on the borrower side or issuer side. I'm coming from France. We have a very big upcoming nuclear program in France, and I guess monetizing some form of long-term off-take contracts involving electro-intensive companies with an upfront premium, and to which extent you could monetize those contracts through securitization scheme, attracting institutional investor demand. That's another example of securitization schemes, but on the borrower side that are being developed alongside what is being explored, of course, on the banking side.
Thank you. Antoine, if you could add.
Thank you, Najib, for taking the risk to invite a risk officer in this discussion. So normally I am the one who is less fluid. Okay, so just to position MDBs and specifically AIIB in this kind of discussion. Clearly, commercial banks and private world doesn't have the same objectives than an MDB. So we can probably fill the gap in some of the area where commercial bank cannot sustain, let's say, or develop a business model which is an originate to distribute. So we just need to be clear about what kind of added value we bring in this kind of transaction. So yes, stability. When some banks wants to develop the OTD business model, originate to distribute business model, and want to move their balance sheet, MDBs are supposed to be more stable, more able to finance long-term asset. And because AIIB infrastructure. Now, I think the positioning of MDB is also a little bit different, of course. It's a dual business model, which is, one, we are providing financing, but two, we are also expecting to transfer some knowledge with a lot of humility, but to transfer some knowledge related to the guidelines of what is an MDB. And then it's a little bit different. It doesn't mean that to clarify also some positioning, we are not MDBs here to improve the profitability of the commercial world. Let's to be very clear. We are here to bring something different, which is an expectation. And I think that what we tried to do with securitization or panda bond was to bring something different, not just the financing, but also the angle of the MDB. So that's the first point. The second point is we need to understand what we are doing. Okay, so I know that coming from the commercial world can be very creative about financials, securitization, etc. And rating agencies are also very creative. So I think we have to be careful to completely understand what is the underlying of the asset we are financing. And for that, we need to build our capacity. We are a bank which is only 9 years old, so it's a step by step. So that's a typical risk officer speech. Now, in terms of for AIIB, as a risk officer, I am supporting the diversification. And any kind of diversification in a relatively small balance sheet of $30 billion of loan is welcome. So even if it's not perfect, we need to grow the balance sheet and we need to participate to this kind of initiative, which allow our clients to have more financing, because at the end of the day, this is a mandate. Thank you.
Thank you, Antoine. So I'd just like to add that Antoine is not a typical risk manager. So all the innovation that AIIB is doing is with his support. So he's been very supportive. We're very grateful. On the investment operations side, we're very grateful. And a couple of points that I'd like to add. So Keith had mentioned that your most recent issuance was 3 times oversubscribed. Right? So that's a very good sign, because what that means is that the market is taking more and more attention. And that was the objective. So if we're very happy to work with Hong Kong Mortgage Corporation and anchor the bonds that you're issuing. But at some point, it'll become a self-sustainable exercise where Hong Kong Mortgage Corporation will be possibly more than 3 times oversubscribed and will not need AIIB's support. And that would mean that both HKMC and AIIB have achieved their objective of making this an asset class. That's one. And I think just to highlight a little bit from an AIIB perspective, AIIB, we call this an innovation because this the infrastructure asset securitizations was the first time ever that it was done globally. And so far, all the securitizations that have been done, AIIB has anchored. So we can say that we have close to 100% market share, which we're very proud of. And we hope that this can become a bigger exercise and more self-sustaining, and more MDBs and more financial players become part of this. And the $8 trillion of issuances globally can also start getting directed towards infrastructure in emerging markets, and that would really move the needle. So with that, May, if I could come to you, what are the Egyptian government's long-term plans in terms of capital markets, and how do you think multilaterals like AIIB can play a role in those plans?
Yes, it's a very good question at this timing, because we had a new government when we're setting now a new strategy, and this strategy is mainly for capping debt in the total public debt, including also the external debt. And we have to play it very carefully. We have to be very innovative. We have to have more innovative financing tools. We started in the past years, last year especially, and I will tell you something about the panda issuance, the experience that we had, because it was very successful. At the time we did the panda, we worked on the panda with yourself and AFZB, and also about how to do the structure and enter the market a year before the issuance, at least, till we get all the approvals from yourself, and we were ready and we were learning. It took us some time to learn how to enter the market, how to do the reporting, the ICMA reporting, all this, it took some time. but it was very beneficial because at the time of the issuance, Egypt, like rest of the emerging market, faced some difficulties in getting finance. And Egypt specifically, because we had some external funding gaps, tapping the normal market as we used to was very expensive. It was around 22% to enter the market, which was very high. And we had some maturities. We wanted to also finalize or finish our project, the sustainable project that we had. So getting more funding was difficult. Our CDS was around 1,500 basis points, which was very high. After showing the market that we can tap with the help of the multilaterals and with the help of you with a guarantee to issue and tap new markets that were not dependent on only one market, surprisingly, our CDS went down. The investors knew that we are ready, we had plans to enter the market at a lower cost with a successful issuance and tapping new markets, getting new investors. This was very beneficial to us. It was even, we decreased our CDS and our yields in the Eurobonds before even the review of the IMF and before the Ras al-Hikma deal that was in March. So tapping new markets and finding new innovative financial tools, blend financing, getting more guarantees, this is very important for emerging markets. Having diversification, this is very important. So this is our plan. Our plan also is to decrease external debt through many sources, through IPO programs that we announced, through increasing the FDIs that we are working to enhance, but having the rest through diversification of issuance. This will help us. This was helped because we worked very hard on it, how to tap new markets. This will not be possible without getting experience from you, from yourself, getting what is new in the market, how we can tap the market with lower cost instruments. This is very important, and for an emerging market like us, we succeeded in the past issuance. We did a samurai also sustainable issuance afterwards. We have now a new vision of 2050 of more sustainable projects that will help us reduce the carbons, and it's in line with the Paris Agreement. This is very important because also the climate change and the challenges of the climate change and finding liquidity for an emerging market like Egypt will not happen without the help of MDBs, not just in financing, but as you said, in giving us more knowledge and knowing from the market and sit with all the market players and know what is new. What can we do to have innovative financing, to partner with other entities and help us achieve our goals, reduce our debt cost, and at the same time, finalize our sustainable project that will help the economy and will help the population that we have, because Egypt has huge population and huge pollution, and all those sustainable projects are very important to Egypt.
Thank you. And I think you led the market in doing the first Panda bond, but we have, since the transaction that we worked with you on, we've got several other AIIB members inquiring about how they can access the market as well. It is the second largest capital market in the world, so of course there is interest, but you did the first transaction, so that's very...
We are also very happy to give this experience because we were the first African country to issue a Panda bond with the help of the MDBs to enter the Chinese market, which, as you said, is the second largest market, and to show the Asian investors that there is an African continent, there is African sustainable project that they can also finance and help in their growth. Thank you.
Thank you. Keith, if I could come to you next. To what extent do you think securitizations can help increase the allocations towards infrastructure? I think we've touched upon it a little bit earlier, but and how does a securitization help expand the universe of investors that can potentially participate in infrastructure financing?
Thanks, Najib. As I highlighted earlier, our issuances in the market, Bohemia 1 and 2, helps to remove the impediments to investors, so to actually allow them to actually invest directly into this infrastructure asset class through our issuances. So in addition to generally infrastructure assets in operations gravitate to a standalone sort of BBB rating maximum, maybe to a single A if it's a relatively really good project. But with the support of securitization, securitizing these infrastructure assets through a vehicle like Bohemia 1 and 2, investors are provided with the ability to invest in higher investment grade exposures to infrastructure class. So our rated notes are from AAA to BBB. So it provides a higher rating to investing into infrastructure asset class. And also, as I talked about, the financial return in terms of the current phase of the development of ILBS is also at a premium compared to similar rated standalone infrastructure loans. And hopefully over time, as investors recognize the risk profile of infrastructure asset class, then we'll see this pricing premium come down and be aligned with in terms of what the banking market sees with infrastructure pricing. And securitization also provides investing into a pool of infrastructure assets instead of a single asset, as I talked about before. And also the credit estimates or the credit reviews that are done on these projects are done multiple times before it actually goes into a securitization vehicle. So in terms of what we do in terms of HKMC, we buy these loans from banks generally and on a secondary debt basis. And so you have banks doing the first credit review, and then we have HKMC doing the second review, and you also then have the rating agency doing the third shadow review. So that gives investors comfort in terms of these assets actually have a thorough credit review before they actually go into the securitization vehicle. And so
Anton is just pointing out that there's a fourth review which his team does.
Correct. Yeah, so with AIIB support, we do have the fourth review of that. Thanks for that reminder. I'll actually bring that out to investors in the future as well. So the ILBS securitization platform makes the asset class, infrastructure asset class, much more accessible to investors, as I've been talking about. So, and also, in respect of in terms of how you're referring to allocation and expanding the investor universe. So soon after Bohemia 1 was issued, we received many inquiries from potential investors. The rationale in terms of why they came to us afterwards is because this asset class is relatively new to these investors. They don't have that product approval to do that. And so after our first issuance, they were interested and then started going into the secondary market to get a flavor of the ILBS issuance and also proceed with their product approval. So it gave them time to get the product approval and then enter into the secondary market. And then when we saw Bohemia 2, that's when we saw the growth in terms of all these investors coming in after doing their product approval. And so there was a lot of education we needed to do in terms of from our part to alleviate their concerns and allow them to actually understand the asset class. And from HKMC's perspective, while we've only got 2 reference points, Bohemia 1 and Bohemia 2, we utilize this ILBS platform for investors to invest in the infrastructure. We have seen the significant expansion from Bohemia 1 to Bohemia 2, and of course, there's other issuers in the APAC region as well, as we've seen in Singapore. And so hopefully, between ourselves, we can actually grow the investor base and also see additional potential issuers come into play. And so investor universe. So through just in terms of looking at Bohemia 1 and Bohemia 2, we've seen, as I've said before, 3 times growth in the investors that's between Bohemia 1 and Bohemia 2. We also have seen in terms of growth from Korean investors, mainland China as well, and also from the Middle East. And also from a repeated investor point of view, we see them relatively become more and more comfortable with the asset class. And so from Bohemia 1 and Bohemia 2, you see them invest in a wider range of ratings in terms of the note classes. So previously they might have invested only in the AAA, and now you see them in the AA's, single A's, and so on and so forth. And these new investors also I talked about in terms of from Korea, China, and Middle East. Over time, they'll become more and more comfortable with this asset class as well. And then they will not just increase their allocation in terms of this asset class, but also, as we've seen from repeat investors, increase their risk appetite in this asset class as well.
Thank you. Stefan, if I could come to you next. From an institutional investor perspective, how do you think they balance the financial return versus strategic considerations? And also, how much does the sustainability factor come into the allocation decisions they make?
Well, definitely, I guess for many institutional investors, the ESG concept is very important at the very start. I guess if you look at the EU example, you have a very strict guidelines under the EU taxonomy for sustainable investments. There is a well-known article which is called Article 8 in the EU taxonomy in terms of ESG criteria and defining proper sustainable investments and classifications, which is being considered by many institutional investors at the very early fundraising stage, even before they have started to allocate and arbitrate infrastructure investments opportunities. So very often it's they have to take into consideration those aspects initially at the inception stage. But second, I guess there are dynamic investors, relative value investors. I insist on that expression, and they are very and that's the example I gave earlier in the discussion. There are reverse inquiries which testify that they are curious to anticipate and are open to investigate new, potentially very promising markets, also from a volume standpoint and from a yield or return standpoint. So they don't want to neglect opening topics, and I guess typically. I can again talk for the low carbon energy space, but low carbon electrification of new forms of electro-intensive use of power, typically digital infrastructure. I guess we know that data centers are becoming increasingly key consumers of power and want to consume clean power. It's potentially tapping lots of new clean generation markets that those investors are very open to explore and don't want to miss the investment opportunity in their allocation, because it could increase significantly. I guess we've observed a new trend of infrastructure asset class we are currently observing it in Europe and in the US in particular, in a re-industrialization context with willingness. It's a post-COVID trend of re-establishing producing capacities in Europe, in the US, in certain key topics related to transition. I can give examples of newly built gigafactories in the battery space being deployed under a very infra business model with some form of offtake contracts with the mobile industry. Upcoming as well, sometimes in partnership with Chinese investors as well, but new solar PV gigafactories established in the US, taking benefit of Inflation Reduction Act, establishing as well in Europe in partnership with global players in that field, but ultimately deploying new domestic producing capacities and ultimately trying to tap and follow a very infrastructure-like business models in terms of input, output, offtake, and possibly tapping as well institutional investor financing. And we receive from those players reverse inquiries. They want to know what's going to happen. It's potentially opening a new market out of the plain vanilla spectrum of the infrastructure asset class, and again, providing some form of possibly promising premium to the yield and the remuneration. So when you discuss with them, when you are in constant interaction with them, those reverse inquiries tend to testify that they are open and that don't want to neglect potentially new areas of investment. So that plays a field in the sustainability investment arbitrage on their side.
Thank you. Very interesting. Very interesting that manufacturing companies are now being structured like infrastructure companies. That's very interesting. Thank you. Antoine, if I could come to you next, if I may call it a challenging question in some respects, but since COVID, the world is recovering differently in different geographies, and the financial markets still remain volatile. What role do you think MDBs can play, like AIIB can play, in stabilizing the situation and then enabling access to these markets?
Thank you, Najib. But clearly, more the world is volatile, I think more the MDBs are needed to stabilize somehow the gap, to fill the gap between capital markets, where we are talking about capital markets here, which are generally short-term, relatively volatile, and markets are about scale. So this is where I think as an MDB, we have a different, let's say, expectation, which is how to leverage the AAA, okay, which is not a target, which is a mean, okay, to deliver the mandate to the members. And here, so between capital markets and the status and the mandate of the MDB, I think we have a role to play, which is different from the commercial banks who have their own impediments and constraints, equity, shares, pricing, mark-to-market, risk-weighted asset, etc., regulation. I think we have a role to play in the middle of that, to provide long-term financing. We are less impacted by the mark-to-market of the capital market operation if we have a significant balance sheet, and this is one of the challenges of AIIB, is to grow and to diversify the portfolio. So we are not, we don't have 40 years or 60 years of track record. So, and when I say track record, it's also important to understand that AIIB is a kind of hybrid business model with, on one side, the sovereign lending, which is protected somehow by what we call the preferred creditor status, where you can consider that the credit risk is very low and provide stable revenues. And thanks to this sovereign portfolio, we are able to take more risk on the non-sovereign side, which is not protected by the preferred creditor status. And this is very important above the accounting rules, IFRS, etc., to understand the buffer of stable revenues, mainly sovereign, but not only, non-sovereign can also provide some stable revenues, to be able to develop, to have the capacity to absorb the shock of the mark-to-market of this capital market transaction, because this is in mark-to-market, so we are impacted as well. So I think MDBs can really play a role between the commercial world and the needs of the members to have long-term financing, because we are supposed to be counter-cyclical, which honestly, having been in the commercial world for some years, is not counter-cyclical at all. So we have this capacity, we have this leverage. It's a kind of arbitrage between the commercial world and the client's needs. So I think it makes sense for MDBs to be in that role. Now we have also to be aware of the specificities of AIIB in that world. But I think, again, as a CRO, I am supporting strongly the capital market development, as long as we understand what we are doing as a diversification.
Thank you, Antoine. May, if I could, the last question before we open the floor to the audience for questions that they may have. But I'm really curious, and I think it'll help not only AIIB, but some of the other members who are inquiring about the Panda bond. You mentioned that you started preparing about a year in advance. So I wouldn't want you to go through all the preparatory work, but can you just tell us who are all the counterparties that you had to interact with, apart from AIIB, of course, but in the preparation and through the execution process, who were the major counterparties that assisted you in the process?
Yes, thank you for the question. Let me tell you, yes, it took a lot of time because it was something new to us as Egypt. It was a new market to tap. So we didn't have a lot of clue how to tap this market. We used the help of the banks. First, we tapped you as a guarantor because we had to know how to tap it. It was a market that has to, in order to tap it, you have to be an investment grade. And we were not an investment grade. So we had to get the help of MDBs in order to get the rating, in order to be able to tap this market. So as AIIB, we started first through you and through AFDB, how we can do it, because it was something new to us. The paperwork needed, because tapping the market should not only have the sustainable framework that we have, and the reporting. We have very good sustainable framework, and we have a very good reporting as by ICMA standards for the project. But there is more to do. There is guarantee work, paperwork, so we had a lot of work to do with the legal. We had the due diligence that came from the MDBs to see the projects, to agree, because they had levels in order to finance certain projects. It has to go through a different category. This is something that we learned also. What categories, how to do the project in those categories, our sustainable projects, even for the coming years. We were learning all the way. We were learning also how the Chinese market works, which banks to attract, how to go to in order to facilitate the NAFMI, how to deal with their central bank. All this was something new to us. This came with the help. It was like a teamwork. And I think at the end, we didn't sleep. When we wanted to make this issue come, we stayed till 3, 4 o'clock at night, even each one in a different time zone. So we actually didn't sleep in order to make it work. But we learned as Egypt, as emerging market, and as Egypt, we learned a lot. We learned a lot how to tap a new market, how to deal with MDBs, how to be because you as MDBs, you have a lot of requirements in order to invest in such or give us a guarantee. How to do it in order to be quick the next time. And how to do it efficiently. And there is work even after. After doing this issuance, there is how to do the reporting for the use of proceed. This is something all new. How to do the team, to build a team from all ministries in order to get you the right reporting. It took us a lot of time. I think next time it will be easier. We are there to help other countries with our experience because it's a really big knowledge to us that we can also share it with other countries. So thank you.
Thank you very much, ma'am.
May talk to me because she's talking about diversification. So I think you issued also in Japan.
Yes. Yes.
Okay, so it's.
But in Japan, it was a little bit easier because we had our first issue in Japan. It was a private issuance. It was not guaranteed. It was insured by CNBC. So it was the first step before tapping the Chinese market. We wanted to tap the Chinese market even before the Japanese. But the cycle of entering the Chinese market was for us newer than tapping a Japanese market through a Japanese bank.
Thank you. So we have about 10 minutes to this session. So I'd open up the floor to questions if the audience may have. So Arvind, you just.
Well, congratulations to all of you for this excellent discussions. I want to zero in on the Egyptian panda bond. I think it's fantastic, it's unique. I do want to understand though, and I'm so glad Antoine is here and Najib is also here, is how did you structure the risk aspects in this deal? And particularly I'd love to hear that from Antoine and from Najib. Because you've guaranteed the bond, and so how was the risk acceptable to you in terms of the structure? That will be very helpful to know.
So I'll start, and then Antoine can add, and May can add. So I think from our perspective, it was taking the risk of our important member country, Egypt. So from our perspective, it's a sovereign transaction. So we have our guarantee to the institutional investors in the panda bond market is backstopped by the Ministry of Finance in Egypt. So from our perspective, the risk is the government of Egypt. So that's the first leg of the risk discussion. From the institutional investors in China, they are taking primarily the risk of the Egyptian government. So our guarantee is a backstop to them. And because the Egyptian government was not at that time well known in the institutional market in China, we all jointly agreed that AAA guarantee and AIIB is higher rated from the rating agency. So we all thought that it will be economically, and from a success of issuance perspective, it was important for the African Development Bank and the AIIB to jointly provide the guarantee to institutional investors. So that's the, I guess, the risk transfer on the transaction. Thank you. I think the lady in the second row had, yes.
Yeah, thank you very much. Very interesting to listen to you. I would like to ask, because we did research on all your capital market operations, the 8 you have, and we just found that 62% of your investments are funding fossil fuel infrastructure. So we wondered if you applied the energy sector strategy of the AIIB, which needs to guarantee carbon lock-ins are not resulted by your investment, and reduce carbon intensity, low carbon solutions are prioritized. So were the principles of the energy sector strategy applied when you do these investment decisions on the CMOs? That's my question.
So thank you for that question. So I'll start by answering, and I'll let Antoine add if he would like to. But so to answer your question, yes. So these investments are completely in line with AIIB's energy sector strategy. And just to clarify, we actually did not invest in any of those assets. So those assets were invested some years ago by the banks who did the primary financing. So the objective of these securitizations is not investing in the underlying asset class. We have not invested in those. So the objective of this effort is to actually mobilize private capital, make infrastructure an asset class for institutional investors. So we're not investing in the underlying projects. Those projects were up and running some years before these securitizations happened. So the objectives of these securitizations are not actually financing those assets. It is actually clients like the Hong Kong Mortgage Corporation, with whom we have very close alliance and interaction on energy strategy and the fossil fuel content that you mentioned rightly. But that over time, the idea is to reduce that content at the primary stage, which is where the market is moving. All the assets that form part of these portfolios are financed by top-tier international banks that abide by the Equator Principles. So just to clarify again, we actually did not finance, the securitizations don't finance the underlying assets. We actually are, the objective is different. We are actually trying to make infrastructure an asset class for institutional investors. And as the market is trending towards greener generation, hopefully the future securitizations will also have a larger component of green assets, as is the case over time in these securitizations. Thank you.
Yeah. Thank you for this question. I can answer. So of course, Najib mentioned that we are not financing in the primary market, but on the secondary market. That's important. And secondly, the question at some point is, if we refuse to do that kind of transaction, what is going to happen? Okay, I've not seen at the moment any pure renewable asset financing transaction in terms of securitization, and that's where we try to, with a lot of humility, that's true. A lot of humility, we try to improve step by step this market and the alignment of this market. And I'm sure that you can ask HKMC or Bayfront in Singapore or Hong Kong. They know that we try to increase and we look at the trend and we push for that. So, so honestly, I think we could have this meeting in 1 year or 2 years, and I do expect that we are going to improve the figures. That's what we try to do.
Just a brief one. Could I talk briefly about the cost structure of issuing a panda bond compared to, for example, a euro bond in terms of the yield, the cost of arranging bank, and the other transactions, very briefly?
The normal euro bond issuance or the normal DCM market issuance is mainly based on the credit rating of the country. So you take the risk-free and you add up the credit rating of the country, and if there is, for example, in case of Egypt, it was sometimes above the credit rating because there was a lot of issuance in the Eurobond market. So there is a little bit of more spread because we didn't have diversification, okay? But and it's the risk-free in the Eurobond, it will be either at the Euro 5 years bond or the US 5 years bond plus the spread, the credit default spread of the country. Entering the Chinese market, because also we didn't have a lot of FX exposure because we have a lot of trade agreement between us and China. So we didn't have FX risk. So we take the interest rate of the yuan because we issued in their local currency. We have then, because we're a AAA, we took the guarantee of the AAA multilateral, there is not a lot of spread because it's like the local currency, the local rating in China is even higher than the international rating. You add up the guarantee fee, and if you have any extra fee like legal fees, because there is a lot of legal cost in it, because there is guarantee paperwork, a lot of legal structure, you add it as an upfront cost, and it will be afterwards deducted from the use of proceeds. So technically speaking, at that time, if Egypt wanted to tap the normal market, because at that time, now our yield for a 5-year bond is around 8%. At that time, because we had some difficulties at that point, it was around 22%. And we tapped the Chinese market with 3.5%. So you can imagine the huge difference between 22 and 3.5 on our cost of debt. So with the help of getting the rating of the MDBs, we couldn't tap the Chinese market. So it was very important. It helped us to also a little bit decrease the debt burden on us. So I think this is tapping new markets with their interest rate depending on the FX exposure is very important for emerging markets.
I will answer from the risk point of view to the first question. Again, we are a kind of hybrid business model with a non-sovereign business and a sovereign business. The sovereign business is typical MDB, protected by the preferred creditor status. And what we try to do is to look at the portfolio rather than country by country. So what we have been trying to put in place since 2 years is to propose to the banking side envelope by rating, B, double B, triple B. What is important to understand is we need the triple B and above to create space for the single B. Okay, so it's a little bit counterintuitive, but that's a reality. So the more we have triple B and A in a portfolio, in a small portfolio compared to most of the other MDBs, the more we can provide support to B-rated countries. And that's this is where, so we don't look at countries, of course we look at countries, but I mean from a risk point of view, it's more at the portfolio level to find the right balance, to create space. And we spend a lot of time, especially in the last 2 years, to create more room for the B-rated countries, which in my view is the core of the mandate for the bank. So we spend a lot of time on that.
Okay, thank you, Antoine. So with that, so one last question.
Just the last question. I mean, thank you so much for such an insightful panel. Talking about innovative financial instruments, this assumes that we have, I would say, an adequate regulatory environment. It would be good to know which role AIIB can play in influencing the design, the thinking, and the implementations of reforms for, I would say, conducive regulatory framework? Thank you.
Thank you. I'll start by answering that. So I think that's a very important question and quite fundamental to financing infrastructure in emerging markets. Also, as it relates to new products, the regulatory role is a role that other MDBs do play, like the World Bank. We currently don't have the capacity to do upstream advisory work to governments. So we are relying on the work that's been done by other MDBs. We are also relying by the work that's been done by governments in the regulatory space. But as you rightly point out, I think that's where the generation of a pipeline of financeable projects starts. So first comes the government's intention to do something in a certain sector. Then comes the appropriate regulatory framework. Then come the contractual agreements that support the regulation. Then comes the open, transparent bidding process. Then comes the equity, and then comes the debt. So I think that's the sequence. So we are currently focusing more on the equity and debt part of these transactions. But maybe in the future, we'll help governments work on the regulatory frameworks as well. Thank you. I think so.
This is a key point. There is a lot of liquidity, honestly, coming into the market. And the problem we have today is how to create more projects. Okay, and I think it will be part, and the new organization is also supporting that, upstream, to find a way to create more projects in the members of AIIB. Because that's the problem we have today. We don't have enough bankable, and I don't like this word because bankable project, okay, to finance. Just because some countries doesn't know where to start because they are busy doing something else. So we try, and I think it's part of the mandate of an MDBs and for AIIB, but we are only 9 years old, and even less if you look at the balance sheet, etc. So yes, that's an objective. A clear objective is to create more projects in the countries, in the member countries. Definitely, it will take time. But I think it's part of the mandate, yeah.
And we have actually started a public-private partnership practice where we've started hiring a team. There's already a senior person in place. So we are building that capacity, but as Antoine said, it will take time. And with that, I'd like to thank the panelists for the excellent discussion and for your time. And I'd like to thank the audience very much as well for your attention, for the time you gave us. Thank you very much.